Good morning, everybody. Welcome to the Flow Show, a US holiday-induced show, shall we say. All the Yanks are buggering off. Blake's down the beach. Sorry you had to see him in the opening shot there. It can't be helped. Yep, he's off down the beach. And the rest of the Yanks all enjoying themselves, shooting guns in the air and whatever else they get up to on this day, this important day where Will Smith saved the world from aliens. Oh, we'll never forget it. We'll never forget it. Morning, Kay. You doing anything for Independence Day?
Yeah, good morning, Ryan. Yeah. And we are creating a new Independence Day, right? Starmer is going to save the UK today. I mean, I'm already looking forward to the movie coming out for that one. I'm not sure we're going to have a lot of sequels or pre-sequels to it, but anyway, it should be a good movie, that one.
Yeah, well, we'll have to wait for 5 years for the sequel to this one. So, yeah, it's going to be a long time in the making. Yeah, we'll see what mess ensues tomorrow when we start getting the results through. But we'll have a chat about the election a little bit later in the show. For now, let's just crack on with what's been going on in the world. PBOC keeping its fixed rate in the 713s, down a little bit, 7 pips, down to 7.1305. Still slow progress for dollar China. There was a headline out from the EU saying that they are going to go ahead with their planned tariffs on Chinese electric vehicle imports. There have been some last minute talks, if you like, between China and various entities to try and get this stopped, but the EU are ploughing ahead with that. That's not going to be good news for Germany, not on the basis that they can't sell more German EVs, but there's a lot of trade between China and Germany. So if the EU starts putting up blockages and tariffs, China will likely reciprocate, and that will be a negative for countries like Germany. So this one is going to rumble on, no doubt. Obviously, as Germany, a big car maker over there. But anyway, back to China. And they've getting their state oil firms to stockpile 8 million metric tons of crude for their state reserves, according to sources. This new stockpiling program will cover July through to March 2025. I'm not sure why this headline is doing the rounds. China does stockpile a lot of commodities annually. They do a lot of stockpiling early part of the year for use in the second part of the year. So I don't know if this is big news or not really. I'll ask our mate Mark in the chat room what he thinks of that. But oil still looking heady anyway. We've got this hurricane still blowing through, heading towards the US. So it's keeping the oil bid anyway. Size is nothing over that period, says Mark Harvey there. Thank you very much, mate. So yeah, oil still remaining a bit bid on this hurricane stuff going on. But yeah, that headline been thrown about, but part and parcel of what they do over there in China. Over in Japan, PM Kishida says that experts are to make the decision on declaring the end of deflation. This is more be a bit of a historical moment for Japan. It's not really going to be anything sort of market moving. It's just a mindset that's been over there in play for many, many years, and it will just be as a bit of a milestone if they do declare the end of deflation. But that conversation has been rumbling for a while now. Experts, yeah, where? Good point, Gav. ECB Stornoas says 2 more rate cuts this year seems reasonable. Services inflation shouldn't be overinterpreted. Rates are to be restrictive even after 2 more cuts. Recent data strengthens the case for more cuts a little bit. ECB's Lane just popping up as we start the show, saying that we still have some concerns over domestic inflation. Bit of data out. It's not been a whole lot going on today or yesterday. We'll go back to some of that stuff in a bit. We had some export data, import data from Australia. We had negatives last month. We got positives this month, so a pickup in activity overall. Just looking at Germany quickly, because we had some factory orders, which came in. A sucky down 1.6%, so not looking good still there for the Germans. The rest of the numbers not looking too good either. The year-on-year workday adjusted number came in at minus 8.6% year-on-year, was estimated to go up 6.1%. So those numbers will probably look even worse if China gets up to no good. Swiss CPI coming in a bit softer than expected. Headline number 1.3%, down a pip. Core also dropping to 1.1%, was expected to go up to 1.3% from 1.2%. The EU number down 2 pips as well to 1.3%. What does that do for the SNB?
Well, I think it keeps them on their, let's call it an easing path, but I don't think it changes massively compared to where they are already, because we know that they have cut. I don't think it warrants straight away another cut. I know people are already thinking that they may cut again the next meeting, but I wouldn't think so. It just does confirm what's going on there. And yeah, we had this early blip. I think the market must have been already pretty much positioned for this kind of outcome. Because it's we had this blip when it came out. Actually had a decent spike, but then it completely reversed back to where we were roughly before. So I don't think it changes a lot. It just confirms. So it keeps the bias for a gradual weaker Swiss intact. But we cannot forget that we are again ahead of pretty decent levels on some Swiss crosses, and especially Euro Swiss, for instance. Sterling Swiss was also coming into a zone that we have traded quite a lot on the way up and on the way down before we had the bigger setback that we saw last month. But yeah, it just keeps everything on track. No need to change anything, and I guess that SNB is relatively okay with that. Yeah, I think Swiss is still on the back of it. A sell on rallies, but needs to we first need to get over the US data and the French election and stuff, and the UK election hump, in my opinion. So keep it in mind, and or do something else. Do Kiwi Swiss or Aussie Swiss or something of the likes, if they are breaking levels. But for the time being, yeah, it just doesn't change the picture. Okay, it just confirms it.
Yeah, keeps things going the same way it has been. Right, over in the UK, we've had the BOE's decision maker panel report survey, we're going to call it. This is all businesses and movers and shakers. 1 year inflation expectations came in at 2.8% as expected, down from 2.9%. So a pip move there. Not maybe as strong as the Bank of England would like for inflation expectations, but going in the right direction. Obviously, we've got the election happening today, which one bit of fallout from that is that once this is done, the Bank of England shackles will be unleashed, and they'll all be coming out and telling us what's what, as they've all been muzzled, shall we say, while the election campaign has been going on. So that's one thing I can't wait to happen, or them not piping up again, but it is what it is. Right, just coming over to some of the US data. We got out yesterday quite a swathe of data, really. Mortgage applications, another little negative. The mortgage rate ticking up to 7.03%. It had been moving down under 7%. Not sure why we got such a move up there. It's not really following what's been happening This tends to sort of follow the data, follow rates, yields, and the like. So it just may be reflecting that uptick we saw in the yields last week. That's obviously changed around a little bit since then. Challenger layoffs, not too much to talk about that one, just under 49,000, better than we saw last month. So it had been ticking up quite a bit. We'd been getting up to 70s, 80s, 60s, as you can see there, but that one's come down a bit there. Job cuts, though, still up 19, nearly 20% on the year. So just playing into the jobs picture a little bit there. ADP came in a little bit softer than expected, but not a number to shake any trees, still positive 150,000. Among that, though, I was looking at the pay details, and the year-over-year pay gains for job stayers were 4.9%, down from 5% previously. But that's the slowest growth in wages since August 2021. And pay rises for job changers also came down to 7.7% from 9.3%. So that's people who want to change up their job, climb the ladder and whatever, look for higher money. The amount of extra money that they're potentially getting is coming down. Now, that's something the Fed will be looking at. Wages is a big part of the inflation picture, as we all know, and these numbers suggest they're continuing to fall slowly, though it may be they're coming down. So let's see if that gets reflected at all in the NFP data that we get on Friday, where those wage numbers will also be equally important. Initial jobless claims, same old, still in the 1.8 millions, came down a bit from last month, from the other week, or had been rising over the last couple of weeks. It's back down again, but still in that 1.8. Weekly numbers, 230s. It's been 230s for a while as well, so no real change there. Then we got some of the PMIs coming out, services PMIs coming out. First was the S&P Global, which showed an improvement to, if I've got the right numbers, I've got the right numbers down. Where am I looking? Oh, I'm looking at bloody Brazil. That's why. Here we go. The US one, 55.3. So that was an improvement over the flash number and over last month. Within those numbers, jobs returned to growth after easing a bit, but price pressures did pull back a little bit. Now, this went completely at odds with the ISM, and they are fairly different surveys in who they speak to, how they count things and whatnot. And that's been highlighting a few press reports, the difference between the two. So the ISM was a bit of a stinker overall. So the headline number coming in at 48.8. That was it was expected to pull back but stay in contraction, but that's a big move into contraction. Prices paid also pulling back a bit, but not too much, to 56.3. Employment, that was a bit of a shocker. That fell to 46.1, was expected to gain just under 2 pips, but it went backwards instead. New orders also going into contraction, 47.3. And one of the fairly important number within this one, inventories, that dropped to 42.9 from 52.1, massively into contraction. That's a number that doesn't bode well for activity and GDP, because a big drawdown in inventories means that people aren't ordering goods, which means people aren't going to be producing as much goods. That's not the sort of numbers you want to see coming into the second quarter of the year. Also bad numbers on the factory orders a little later as well. They dropped 0.5% month on month. We're expected to rise 0.2%. Take out some of the big items like transport, that dropped 0.7%. So we're just getting a bit more data now coming in with a few more negatives on it, minuses, contractions, that sort of thing. It's all starting to mount up. The importance, though, is whether it drops off a cliff or whether this is just part of the soft landing. The plane's still been in the air. It hasn't landed yet. It's how it lands. It's going to be important. Kay, what did you make of that data? It looked shocking on the first look.
Yes.
Yeah.
Well, again, we first of all, I mean, I could do. I could say, like I told you so, it's going to slow down. We're starting the second half, although there's still June number. But again, we have to look at it in a series, right? But this is not good, and this is kind of confirming these yellowy, orangey flags that we have been talking about, and it's starting to it does look, at least, like that is starting to come through. And I think now, from now on, we need to be a bit cautious about all those US data. And yeah, I don't particularly, I don't like the employment again. I don't like it, and this is since we are in an employment data week. It may hint at something for tomorrow, although BLS have always managed to massage, it seems, the numbers a little bit between their own and other private reports. But yeah, I think the flags are now turning quite a bit more orange than the yellow that they were before. And this could be part of the clarity after a very, very muddy and undecisive, unclear Q2. This may be the start of something. And we are going to have to monitor that very, very closely, as he also said. I mean, underlying or sub components are not showing a great picture. Although the inventories, it was said that again they still having issues with supply also. And I mean, if you look forward, if you go fast forward to November, if Trump gets elected, I don't think that the supply side from outside of the US is going to improve much. But yeah, I really think we need to be a bit careful here. And of course, the ISM, as we've already been discussing a good few times, is really overpowering anything that we could see on the S&P Global, because it's not the same people, it's not the same size of samples either. A lot more in the ISM than we can take away from the S&P global indices. So yeah, I'm not very. This is not an optimistic set of data.
Yeah. I mean, yeah, the first thing I look at the report is the respondent comments. Now, obviously, they can be selective by the ISM, so you have to take them with a bit of pinch of salt. But you can pick up a sentiment trend, if you like, within those comments. Nothing in the comments was really overly bearish. There was no one saying orders have fallen off a cliff and demand is down massively. There were a lot of supply chain issues being touted. So yes, that could be one reason for the inventories, but there was certainly no huge big negative comments coming out of that. So yeah, it may be just a mechanical reaction we're seeing here, but the numbers are the numbers. Now, what we have to be careful of here as traders is how it's interpreted. Okay, when you get bad data, and we've said this time and time again, market doves always shout louder than market hawks. Okay, so when things are getting softer, everyone goes into zero hedge mode, where the world is ending. A few bad numbers and that's it. It's the end. The dollar's done for. The US is done for. The whole world's going to crater. Okay, those sort of calls get louder. It's easy for traders and inexperienced traders to get whipped up by that and start thinking you need to sell dollars with every pound you've got and throw the house at it because the dollar's going to zero, Dixie's going to 80, that sort of thing. You've got to be careful not getting caught up in that hysteria in the presses. Okay, look at the data. The data might collapse, might fall off a cliff, and then we'll see big moves in the dollar. It might not. It might just be bumpy. It might just soft land. So be careful. Don't start positioning based on, as I say, the press or market hysteria. Read the data, listen to us here at the Flow Show, and then you'll get a better idea of what you should be doing rather than panicking and throwing your house on the dollar. So we don't know. We'll react to the data. You trade your ranges on your charts, and you listen to the levels and watch the levels, and you get guided by the levels. Okay, I don't want to see anyone getting turned over because they read zero hedge too much.
And also, if we look at data, it's easy to go a bit panicky, as you say, over a red number. Yes, they are below, but some of those indices are diffusion indices, and it's not always like just face value of the indices. You know, it's just a percentage of respondent here and there. So again, we shouldn't hang our hat on to one index, but you know, just looking forward, if by any accident we would have like a bit of a slower number or set of data tomorrow on the NFPs, it could be that the dollar is in for a little bit of continuation to the downside, right?
Yeah, exactly. And we've seen it time and time again, you know. Look at jolts. It's been coming down. Then this week, it's back up in the 8 millions again. As I said, you know, these challenger layoffs, not a huge number, but something I'll keep an eye on. It's been creeping up, and then it comes down again. So, you know, trends is what you got to be looking for in the data. We've highlighted it with the housing. That's been getting weaker over the last few months until last week. All the housing numbers came in negative. So look for your trends. Now I'm getting more interested in being on the short side of the dollar. Still happy to play the ranges, but I'm going to be choosy if I'm going to be buying dollars on those ranges. But yeah, my sentiment is now shifting more bearish for the dollar at the moment.
Welcome. Welcome. Welcome to my side. You know, I've been a dollar bull for very long, right? A very long time. But now I'm since June-ish, I'm starting to I've gone neutral, and then I'm starting to lean a bit to the other side as well now. It's just those series of flags are starting to accumulate, right?
Yeah, exactly. But it's not. I mean, it's not yet. I mean, you know, you're similar to me. When you see these trend moves or the trend changes, you start loading up, you know, for a big old trade. But I'm just not there yet.
No,
because I don't. At the moment, I don't see things falling off a cliff. It hasn't fallen off a cliff for the last 6-8 months. It could happen, but I just don't see it happening. So I'm not yet ready to jump in with both feet and start building up a big dollar short position.
No, I'm still in the same mood as well. But where I was long dollars to initiate a position and then slice and dice within ranges, now I'm really moving to the other side because but I am still, as you say, I'm still taking profits when cable goes up a little bit, and then see if I can reload a little lower. Same thing with the Aussie. Same thing in gold. I'm not like really going gangbusters like a full load long on everything. It's just like the start off, and now we will need confirmation and stay flexible as well. If things could still turn around, it could still be like a couple of bad or worse months. And if you look at, for instance, yields and equity markets, they are not on the train yet either for it being a disaster coming, because yields are still holding up pretty much where they were in the bigger scheme of things. When we see that, we had a bit of a blip higher. Now we're coming back to the middle of the range that we were in since February, really, and it's not yet a clear picture. Equity markets are still enjoying things because they also think that things are not yet falling off a cliff. So, and we in the FX markets are no different. We have to look at all those indications as all those indicators. We have to look at a bit of the correlation between, and we are not yet. It could be the start of, yeah, and I think it may actually be the start of, but we have to always be reasonable in our expectations, because the market tells us to be reasonable in the expectations.
Yeah, very much so. And Ali asked, but what if Trump's US politics play a role in dollar strength? We won't know that until he's in the hot seat.
Well, we had a bit of a sample, Ali. If you go back to the first debate that they had, and then the one last week, you have a bit of a sample of what could potentially be the first reaction. Although there's one reaction that some of us in the room did not really understand. Well, it was all linked to higher yields and a bit lower equity markets that people, I think that was algo related that bought dollars. But if you want to know what's going to be the first reaction, just look at what happened after those debates and after already in February, you know, when Trump won the Republican the Republican nomination. It's you see what the market is doing when he gets in the seat. So that is something that tells you what that could be the first reaction if he gets elected. And you keep that in mind, write it down, and then you will see if it matches the reactions if and when it happens.
Yeah, exactly. But you know, he can shout and scream about what he's going to do now, but he has to get in the hot seat first, and then see whether he follows through with those things. I mean, this election stuff's becoming a bit of a mess right now. You know, one of the reasons why the dollar might go bid on a Trump possibility is the fact of the performance from Biden. You know, that they want him out over there. A lot of people want him out, and you know, markets want stability, and they see someone who's got their full faculties and in charge of one of the biggest country in the world, and they see someone who isn't in charge of his full faculties, and that can be a worry. So Trump may be bad for the dollar in policy, but good for the dollar short term for stability. But if Biden gets booted out or exits the race and they get someone in more sensible, then you could see the dollar rallying on that stability. So there's still a lot of unknowns to come from this.
Yeah.
So you know, you can't, as I've been saying on the show, when it comes to politics, you've got your short term over the election, up to the election moves, and then you've got the longer term, the policy side of things. So you know, you have to take it in it's almost two different trades, if you like.
And let's not forget that there's a massive amount of data to come out before they even go to the polls, or to the.
Exactly. So anyway, just on that Biden thing, this is how it went down yesterday. The New York Times reported that he told an ally he is considering whether to continue in the race or not. Then not long after that, the White House came out and absolutely called it false. It was absolutely false that he's considering dropping out. And you know the old saying, it's not real until it's been officially denied. Apparently, some House Democrats are considering demanding he withdraws from the race, according to a senior official. Apparently, dozens of Democrats are considering putting in letters to have him exited. Biden has come out fighting, saying no one is pushing me out. He's done some interviews as well, which are going to be aired. I think there might be one yesterday, and there's going to be some today and tomorrow, where he's going to put down a strong foot, shall we say. White House Press Secretary Jean-Pierre says Kamala Harris is the future of the party. So after all that, we've got if he does go, it's going to be a case of who comes in. So yeah, this election trading for this one is very messy at the moment. Yes, exactly, Gavin. It's all going to come down to the money. I said that in the chat room yesterday. The donors, people who put their millions and thousands into the party, will have a big say in whether he continues or not, because they don't want a senile old man running the country or running the party that they've put tons of money into. So that's going to be a big effect of that over there. But enough of them. We've got enough problems over here in the UK to deal with without getting stuck into the US stuff as well. Fed's pal, date for your diary. He's testifying on the House panel, 10 a.m. July the 10th next week. That must be all the Humphrey Hawkins crap, Kay, isn't it? I haven't looked into it.
Yeah, I think it's 2 days of popcorn and yeah, and I'm actually not even not looking forward to it. Perhaps to what he
I'm
says.
booking it off.
Huh?
I'm booking it off.
Well, I mean, no, but all those questions that people get, and they are, and now especially going in an election year, they are going to talk a lot more than Powell himself, you know. So
Yeah.
no, I'm really not looking forward to it. Give me the data and I'll trade those and listen if by any chance he says something spectacular, and that's it. I'm not going to listen
Yeah.
for 2 hours to their crap.
I might have to trade the trading screen from my golf clubs for that afternoon. Right, moving on. Just something, speaking about housing, there's a residential broker and mortgager in the US called Redfin. They've been out with a report saying that US home prices have hit an all-time high, and that's going to push down pending sales, or is pushing down pending home sales down 5%. The last pending home sales report, I think, was last week, where it was noted there that prices were at an all-time high and pending sales were down a little bit. This firm, they've got a 0.8% share of the US housing market, so they're not big in any way, shape, or form. They may just be trying to grab headlines, but we'll keep an eye on that. They're saying pending sales are going to be down 5%. Right, over in France, we've moved on from polls over the first round election to polls over how many seats all these parties are going to get. And if reality follows these polls, we're heading for a hung parliament in France. The Harris poll yesterday showed that the RN, the far right RN, the Pence party, would get between 190 to 2, or projected to get between 190 and 220 seats. That is well short of the 289 needed for a majority. So you know the marker come Sunday night, Monday morning, seat-wise, how many this party's got to get for a majority. Anything less than 289, and we're heading for political stalemate in France, and however long that lasts. This left-wing alliance would get somewhere between 159 and 183, with Macron's mob getting somewhere 110, 135. So I don't know what the fallout's going to be with this. The euro is not really paying attention, or euro dollar's not really paying attention to it right now, but it could be a case again where we pay more attention after the data on Friday. Maybe we see some risk coming off the table just ahead of that. We'll need to keep an eye on it. Okay, I don't think we're going to get the same reaction if it's a hung parliament. You know, when the elections came out, the results came out, and we saw euro rallying. I don't know if we're going to get the same reaction if it's a hung parliament, or whether focus is really going to shift.
No, we're trading the dollar right now, yeah, into tomorrow, and I am still a bit reluctant to hold any euros in my position, because we could have a second round effect there. I think the reaction that we had was people a bit too negative, and perhaps I'm not going to say that the market didn't understand the risks, but got a bit too heavy into risk off for the euro. And since then we had those weaker US data, so the euro picked up again. It all depends, because the thing is, of course, there's been hordes and scores of people pulling out to give the better chance candidate a chance to fight RN. But we still don't know how it's really going to pan out. Imagine that we have even more voters going to the election, which may hint at first at people saying, yes, we want to vote against the far right, but imagine those voters are far right voters who are absolutely pissed off with everybody else, you know. So it's still I think it may be it's still a risk event, you know, these French elections, in my opinion. Especially if if it's going to be a real mess on who is getting which seats, because as I've been saying already a few times, look into what's happening on the far left. Most of them don't even agree with each other. So yeah, I think it's quite a risk event, this French election again.
Yeah, and I don't want to I don't want to get into political opinion or anything like that, but I think the Pence party it's called far right, but I don't think everyone who's been voting is your neo-Nazi who's been doing that. There's enough people who are just pissed off with things and the way things have been going. So you're talking, moderate centrist people who are voting that way because they don't see any change voting the other way. And I think the risk that France and a lot of countries face with this at the moment is, and France is a big case, all the other parties are running around. Their whole ethos right now is stop RN getting a majority. No one's stopping to think, well, why have people voted for them in the first place? Why have they swung that way? Instead of listening to the people and what these voters are telling the left, the centrist parties, they're ignoring that. And if that's their attitude, that can actually maybe force all these moderates and whatever to vote the way of the RN party, because they're saying you other guys are just not listening to us. So that's the sort of that way that the pen could become a majority.
Yeah, France, together with a couple of other, several, but I don't know all of them that well in Europe, the way they vote over there. But France especially is anti what they don't like voting country.
Yeah.
So this is where I think the big risk lies, because if they don't like the left side candidate, they may even go to the ballot and say like, well, you know what, sod you, I am voting for RN because I don't like all the immigrants coming in, and this is not politics. This is just a fact on the ground. I mean, we can compare it to the UK with all the boat people. I mean, there's a lot of people who are not happy with that, or even not happy, scared, and that is the worst vote. Yeah, a vote of scare. So yeah, if the same is in the US, Michael, yeah, I mean. There you go. There's your risk for what's to come in November as well. I mean, but this is the thing, and it's a human thing. It's not drilling in on politics. It's a human thing, and that is the risk, I think, in the French vote. There is a real risk there, and I'm really not going to discount it at all.
Yeah. No, very much so. And you're quite right. French are very emotional people, and you're right. If they don't like something, they go against it. People in the UK will go, "Oh, we don't like the Conservatives. They've done a load of crap," and they vote Conservative the next election because they're too scared to go the other way. But anyway, yeah. So there is still a real risk for this French stuff. But I think the base case is we're heading for hung Parliament and a big old political mess, which will probably drag on for months. Which won't be good for French assets, particularly those spreads. So we'll see what happens with that next week. Right, that's it from me on the news front. Unless Kay's got anything to throw away.
Oh, mate, tell us everything you know about the UK elections.
Oh, really? Do I have to?
Well, I don't. It's up to you.
It's all on me.
I'm not
It's
English.
all on me. Okay, so here we are. We're in the UK elections. Polls are open. Everyone's out voting. I'll be going out voting later, probably after dinner. Take a wander with the wife, and we'll go down and see what clowns are on the ballot paper. Just so you know, no, I haven't voted just yet. I'll be doing it later. Here's a blog post I put up yesterday. I put the link in the chat room just to give you a brief outline. The crunch points for this election. Polls close at 10 p.m. There are several seats, constituencies up in the northeast, Newcastle, Sunderland, Blyth, and a couple of others, Northumberland up there, who get the results out very quickly, sometimes within an hour and a half, that sort of time. That can be one of the, if not the main, one of the main moving points for the pound, because that first results are what the market's going to jump on. Now you have to know what these areas might be like. These were big areas for voting leave in Brexit. As mentioned, they caused one of the biggest moves in the pound of that whole Brexit night when that first vote came out, and it was a big vote to leave. Really got everyone shaken up. So they might be, how those guys vote will give us probably one of the biggest market reactions. If it's not for one of the main parties, if it's, let's say, for the Reform Party, which are also seen as a bit on the right, that's going to probably upset the quid. Conversely, if it's a big vote for the Conservatives, that's going to have the market thinking that Labour may not get as big a majority as expected, which might in a way be negative for the pound. So that's your crunch point, between 10 and 12 o'clock UK time, BST, is your main crunch point for the pound for volatility. After that, the results will dribble in throughout the night into the early hours of Friday morning. And then the picture will start to grow as to what's happening. If Labour isn't going to get a majority, if it's going to be a hung parliament, which I think is unlikely, but it's a possibility, that's going to be the most negative case for the pound. If they don't get a majority as big as expected, and a lot of the market or the polls and the political entities are saying that they're looking at a majority of 150 seats or more. If it's less than that, less than 100, then again, you're probably not going to see the pound like it too much. It's not going to dump off, but it's probably not going to go up too much either. Overall, I still favour that the pound shows some positivity if there's stability at the end of the day. Okay, that'll be them telling the market, hey, we've had an election, we've got a government, the government's going to function. You know, right now there's no immediate risk of for investors and the like. Then again, we move into the second part of the trade, which is what the policy is going to be, budgets, taxes, blah, 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 blah. But that's for the months ahead. Initially, I would think that the pound is buoyed with a stable government in the interim. Kate, sorry, would you?
Yeah. Well, first of all, yes, that's how the sterling has been trading. The like virtually done outcome. I had a question for you. Is it a simple majority here, or do you need 2/3 majority to push reforms or whatever through? Because I see that there's a total of what, 650 seats, and Labour are kind of, some predictions say that they're going to come out around 450. Do they need the 326 to have the majority, or do they need more? Oh, I think we lost Ryan there.
Sorry, mate, I had my mute on. Yeah, you need over, one seat over the majority.
Okay, so 326
over the halfway line. Yeah, sort of thing. Okay. Yeah. So it's not a consensus percentage. If you have one seat over, you've got the majority. Flaky as that may be. Because obviously we get by-elections during the courses of Parliament, people dropping out, people getting caught out usually for doing something wrong, as has been the case recently, and then that can shift the majority. So the slimmer the majority is, the greater the risk that you can lose that, and then you fall into political instability, shall we say. But 150 plus seats, you can do what you like, and you don't need anyone else to stop you, really. So that'll be the way. So yeah, three bases for trading: hung parliament, and the size of the majority, and overall stability, and then we take it from there. So that's going to be that. If you do have any questions on the election, then chuck them up in the comments here while we talk about prices, and we can always come back to it. I'm going to have a quick look, just a few bits and pieces that I'm in. Euro sterling, I'm obviously going to keep a close eye on because I'm short in this one. We're just hovering around now. I'm going to see if I can hold this through UK elections and then the French elections. As I said, I see a path where the pound gains, and I also see a path where the euro comes off a bit if France is a bit of a mess on Sunday. So the perfect pair to play that, in my opinion, would be Euro Sterling. I'm not expecting it to collapse or anything like that. If we get down to the 84 figure, I'll be more than happy, even down towards 84.20s. I'll be more than happy with that. Cable, a different kettle of fish. Again, I think this could be one where if we get that stability from the election, if we get a bad or if we get good NFP data on Friday, I don't think it's going to change around this trend. I think we are in rally sell mode for the dollar. So any dip in cable would look pretty appealing. You still long a bit of this, Kay?
Yeah, yes, I am. I did cover yesterday. I did cover my Euro Sterling. I really should have kept it, but anyway, it's not far away. We're talking about 10 pips or so. Yeah, still a bit. Well, basically based on the dollar mostly, and yeah, I mean stability should be all right. I'm not sure about the second round effect yet, but. Being labor, but it should be all right at first. So I think we could get trade the dollar if nothing really special into the weekend, and then see what the market thinks of all the election results. Perhaps even come Monday only, right?
Yeah, exactly. But be careful which if you trade in the pound over all this. Be careful which pound you trade. You know, your guppy is a bit of a wild horse. You know, you might not want to be sitting longs in that one if the MOF decide to turn up and give it a little tap on the head this weekend after the weekend, or even into the weekend. You never know. So just pick your pairs with caution, your pounds with caution, if you're going to be trading that one. Dollar CAD, another one. I was looking at my old 136.50 yesterday, and that data came out. I was like, no, I'm not touching it. We have had a move down towards. We've come down to the low we saw previously. What data was that on? That was last week. Was that the CPI? Not the CPI. Was that CPI data? No. When did we have that little blip out? No, Tuesday 25th.
Yeah,
I can't remember what data point it was.
CPI came out better, but then it reversed straight away.
Yeah.
CPI came out a tick higher, but then it reversed straight away.
Yeah. So anyway, we're down to that. We've tested those lows again. So it's keeping this support at 136. I might have a little go here. As I say, I'm not too bullish on the dollar at the moment. And as you can see, we haven't bounced that far after that low yesterday. I am still running some sell stops below this zone because I think if it does break, it may have a bit of legs in it because it's been such a solid area for the last couple of months. And what happens is when you get levels like that, when they do go, you tend to get a bit of follow through. So I'm keeping my sell stops below that. I'm more cautious about taking along. Don't know. I might have a small one. We shall see.
Tomorrow,
see NFP data. Yeah, that's the other thing. I don't know if I want to get in anything ahead of the NFP either. But again, I might be more inclined to sell a rally in this one now rather than buy a dip. Just to stay with my bias for the dollar for now. Oh, blimey, is that the time? Kay, do you want to have a couple?
Yeah, no, it's okay. Just while you're on that Canada, I mean, guys, don't forget tomorrow. There will still be a lot of traders and money managers out for the long weekend since the 4th of July is on this Thursday. There will be people out for the long weekend already, and perhaps a bit of a hangover in after the UK elections as well. I would be very cautious regarding liquidity tomorrow. Especially over the data. Watch out for your liquidity providers because they may have screwed back a bit on the risk of seeing bigger moves and take back a bit liquidity. So watch out for your prices tomorrow.
Yeah, because a lot of Yanks will take the opportunity to make a long weekend out of it, a little 4-day weekend. So and also it's Canada jobs tomorrow as well. It's double bubble, so there's double risk for the loony there. But yeah, well, Kay, if you don't want to, just look at the time. If you don't want to have a look, we can call it a day. Up to you, mate.
Just a couple then, if you want, and I'll literally take 2 minutes.
Okay, no worries. Clock's ticking, mate. I've set an alarm.
Yeah, no problem. Yeah, but you haven't given me the screen yet, so just
All yours.
now you can
Oh,
start.
I let it on. I let it on. The extra time.
Yeah. Okay, so no, just one thing I wanted to show, because I'm a little long here as well. Well, I'm still a bit in the cable, but just wanted to show this gold. It has broken a bit up here. We had the retest around 23.50. That's your first little support. I would still say though that since it's only a 2-point, which is now becoming a 3-point line perhaps, is perhaps not yet your biggest level, because tomorrow we still have that NFP report out, right? So I would still watch this heavier traffic zone here between 23.40 now and 23.20 as a bit of a bigger support zone. But as I was saying already, through last week and before, we had chances to come down. It didn't. Now gold is showing some kind of impetus and to trade a bit higher. But we need to break 23.63.68 to confirm and continue, in my opinion. Okay, so for as long as we are below here, it would still perhaps even do a double top or so. We don't know, but that is for, I think, tomorrow. Today there shouldn't be too much of a move. Silver is trying as well. Broke above. It's all happening, I think, between 30 and 31. If tomorrow we are back below 30, I can see a few stops, and then we may even get down to 29 again. If the number is slightly weaker, but no big disaster, I would say, dollar weaker, and then watch what's going on at 31. And then the last one that I want to show today is we had the Swiss PMI coming in, CPI, sorry, coming in a bit lower, but look where we are, 61.8 of the May-June decline in Euro Swiss comes in at 97.60, and then we have a level that's been traded a lot of times, 97.70 and 97.75. So, and as I said, this is kind of a pair that a lot of people watch for to know what really is happening to the Swiss franc. Know that we, on the weakest CPI, we bounced, but we could not take it out. Well, not even test it, let alone take it out. We just stopped shy of the 61.8. So we got a big level coming up here in the Euro Swiss. So, and that is one, I think, for after the French elections, whether you fly through or we stay below, and then we may even correct despite the lower Swiss CPI. Back over to you, Ryan. Wishing all those who celebrate the 4th of July a happy Independence Day.
Yep, echo those sentiments, mate. Thank you very much, and thank you all for coming to the Flow Show each and every day. We love having you here. Have a great day, everybody. We'll catch up with you tomorrow and see what the state of the UK is. Might be burning down to the ground, or it could be gelling ice cream. Who knows? Have a good one. See you tomorrow.